the only asset in the world that is offsetting the monetary printing. It's not gold, it's Bitcoin.
The synergy between economic recovery and crypto activity is projected to intensify. Raoul anticipates that as economies regain momentum, crypto markets will thrive, fueled by increased spending and demand for tangible assets within the digital economy. This prediction is based on his latest research, which suggests that despite prevailing market conditions, there's an underlying momentum primed for acceleration. In a rapidly evolving landscape, marked by interplays between global economies and emerging technologies, Raoul discusses his investment strategy with a keen eye on Bitcoin and crypto, and believes the forward-looking indicators in the market will bring massive gains in the coming months. He also believes central banks will play a critical role during this season as well, as their printing practices always play a pivotal role in the crypto domain. And as economies decelerate or interest rates soar, the likelihood of rate cuts becomes more plausible. This isn't confined to the United States alone, but will affect markets globally. Let's get into the latest interview with Raoul as he gives his latest prediction for Bitcoin, the crypto market, and where his investment strategy is aimed in 2023. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
Bitcoin has not only offset the monetary printing, but massively outperformed it. One other asset has, which is the NASDAQ, after 2008. Before 2008, no. Bitcoin didn't exist before 2008 either, so in fair terms, the NASDAQ does. I'll come on to that towards the end. But Bitcoin is the one thing that is outperforming the Fed balance sheet. And that means that it is offsetting the debasement of currency. Once I realized that, and that Bitcoin was going to be the supermassive black hole that eats all other asset classes, I just realized there was no point doing anything else. I want to give you the big picture, the really big picture, where I think everything is going, and it's obviously mainly about the digital asset space, because I think it's the single most important thing for everybody to understand. And in order to do that, I'm going to give you my journey of discovery so you can piece together some of what I've learned on my way, because there are many narratives you've heard me speak about, but I haven't really put the whole lot together to give somebody or all of you something really meaty to get your heads around. Now, again, you don't need to agree with all of it, but I want to show you my journey, how I got here, what I think is going on in the macro backdrop, what I think this means and why I chose Bitcoin and then cryptocurrencies, why I diversified, what I think the actual space is really headed, and where this whole thing is going and how it fits in to the future of everything. So 2008 was a period, in fact, I'm going to go back to 2000. 2000, we started to see the debt bubble increase and the rise of central banks. So Alan Greenspan back in 87 was the first one to start using interest rates really to stabilize markets. That became modus operandi by 1998 when long-term capital blew up. The Fed did it again under Greenspan. Then 2000, we had the stock market crash and the recession. And again, interest rates were used heavily. Now, the money illusion meant that lower interest rates, people thought, I'm going to take on more debt. So they took on more and more debt. And that led to the housing bubble, as we know. And then that blew up and almost brought down the world's financial system. Now, I was in Spain at the time. I'd left the hedge fund industry, but I was still writing, as I do today, Global Macro Investor. And I realized that the fragility of the system was now becoming the most urgent thing, and that after 2008, we hadn't really solved it. In fact, it was bloody clear by the time we got into the European crisis in 2012 that it was not solved at all, and debt was the big issue. And the only answer at this stage became the printing of money, because there was no other way to deal with it. It had become too big, too gigantic, too scary, too dangerous for anybody to let the fire burn. The whole Austrian economic idea of creative destruction was now almost impossible to implement because the destruction would have been total and complete. But after 2012, I wanted to make sure that there was a way out. I had started to have Bitcoin on my radar screen as some good friends of mine, some Global Macro Investor members, had been involved in early days. I was going to set up the world's safest bank. That was the idea. A bank that only held US treasuries, and that any money on deposit was entirely matched by treasuries that were held at the Fed. No rehypothecation, no nothing. So it was kind of a bank outside the banking system. So I was running around the world looking at this idea, and the Bitcoin idea came to me from Emil Woods. And Emil said to me, listen, this might be your answer. And I had seen it and looked at it, and it was very interesting. In 2013, I bought it. It went up 100% in a month, and I sold it. And I was like, wow, okay, what was that? I wrote an article in 2013 or 14 about the stock to flow of Bitcoin, looking at it versus gold, and saying with gold at about $1,300, where it was at the time, I would impute roughly, without the great maths that my friend Plan B has managed to do, but I had a rough rule of thumb that Bitcoin was probably worth $1 million in comparable terms, using stock to flow, how much gold was underground, how much gold was being mined, etc., and back imputing into the Bitcoin price. And that gave us a macro framework, and that macro framework became quite well known at the time and got passed around and got many people into the space, actually. Then I was out of the space for a while, then got back in around 2015, 16, and I started buying again, probably around 200. And I think I sold out early when the forks were happening.
Amid this fiscal tightrope walk, Powell discusses the economic indicators we're seeing, as well as the debt dynamics and the pivotal role of central banks in shaping the market in the last part of the year.
I had always said that crypto, and Bitcoin in particular, and macro were the same thing. They just didn't know it yet. And most participants didn't know it and didn't understand it. Crypto came from a different community. It came from a community of developers, the kind of cypherpunks. It came from Austrian economic school kind of philosophy. It came from libertarian philosophy. It came from a number of different things, but it started to attract the attention of finance people, particularly the macro guys like myself. Our job is to find assets that best represent our views and where we are in the world. And we are all, without question, troubled by the debt supercycle and how this all plays out. So when we saw Bitcoin, one by one, people moved across. Famously, Dan Morehead was first. And then a lot of people, whether it was John Burbank, Mark Yusko, whether it was Dan Tapiero, whether it was myself, Mike Novogratz, bit by bit, everybody from the macro world, Stan Druckenmiller, Paul Tudor Jones, Alan Howard, you name it, they're all moving across because they've seen the magnitude of the opportunity, because we all knew that they weren't parallel paths, they were convergent paths. But it's the macro backdrop of that is very important to understand, because within this, the only answer was the creation of more money. And that creation of more money was clearly going to be very, very beneficial to Bitcoin, because it was basically created for this. And I pointed out early on, back in March and April, that Bitcoin was two things. It was this store of value narrative. And it also had a call option on the future. And I started developing some big meta-narratives to help get people across the line, because I know it's a scary, different world and people don't want to understand this weird digital money. I don't want to throw money at this. But I tried to explain to people in simple terms things like pristine collateral, how this is superior than many things that we have in the existing system, or in fact, all of the things that we have, how it acts differently, how you can't create more of it, so as collateral it's worth more, and therefore is a better foundation stone for the financial system of the future, and how as a store of value, it offsets the monetary printing, and how this could all transition into a future economic system that had incredible value. And that's what made me irresponsibly long. Okay, what also is coming is the central banks have seen this digitalization of money, and they want to be involved. And they want to be involved by creating central bank digital currency, not as a competitor to Bitcoin, but as an ancillary agent within this new digital money system. And that's all well and good. That's basically government stablecoins. Fine, I get it. It's much better. It works really well. But it also has other qualities, because the other qualities are it's programmable. So essentially, central banks can program money so we all have different monetary policy or different tax regimes or whatever it may be. The point being is behavioral economics is going to shoehorn its way in to monetary and fiscal policy, which are combining. And at that point, we are really beholden to what central banks do. Can they destroy money? Can they destroy our capital, our savings? Of course they can. And we needed a life raft. And Bitcoin was going to be it.
The stock market's plight provides an interesting parallel to the cryptosphere. Raoul believes we'll actually see a supply-induced price collapse in the crypto world, but will lead to a positive market response. He underscores that market participants often focus on present conditions and narrative, losing sight of the forward-looking essence that drives crypto markets. Powell's investing philosophy capitalizes on these dynamics, advocating for long-term strategies during business cycle troughs. By adding to positions at long-term uptrends, investors can harness the potential for significant gains, even in the face of prevailing negativity. He emphasizes the role of liquidity indicators, which, when moving upward after hitting a bottom, signal a potential reversal and serve as key markers for opportune entry points. What do you think about the latest interview with Raoul Pal? And what are your thoughts on his insights regarding the future of cryptocurrencies and their impact on the global economy? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.